if Biden gets elected, I think we will get a much weaker dollar. And I think that's very positive for both gold and silver. If Trump gets reelected, in the first few months, he's also going to be very supportive of a strong economy, fiscal stimulus, jobs, and whatnot. That's going to be good for silver short term. But in the end, Trump is much more favorable to gold than to silver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on our coverage of the gold and silver markets, and excited to have Lior Gantz of Wealth Research Group, the founder, who is joining me today from Tel Aviv, which I think is quite exciting for a variety of reasons. Obviously, Lior has been studying these markets for quite a while. Also, it's nice to just get perspectives from around the world. And I will mention in the description link below, if you go to wealthresearchgroup.com/bull, I believe, Lior, is where you can find, you have a gold and silver report people can check out.
Definitely, yeah.
Okay, and I got that address right. researchgroup.com/bull is where they can find that.
Exactly.
Cool.
Yes, sir.
Well, that link is in the description field below, and we're going to be talking about whether the gold price, you know, we've been over $2,000, record territory, dipped below, and I mean, I could understand maybe a normal world, you'd say, I don't know, maybe that's the high, it comes back down, but then you look at what Jerome Powell and the Fed is doing, you look at what's happening around it's global hyperinflation. So Lior will dig in today, but perhaps far more importantly, how are you doing today, my friend?
Doing good. Tel Aviv is, or Israel is under quarantine since October 1st, if I'm not mistaken.
Yeah.
It's not a full-on quarantine, but you can leave the house only for certain purposes. Malls, restaurants, and whatnot are closed, and there are no schools and kindergartens. So it's definitely putting a strain on parents. And this all has to do not with the amount of deaths that we have as a country, because it's pretty low. I think we're under 1,500, and that's including the mess we had at the beginning, where a lot of people died at the elderly homes. But it's mostly because of lack of medical staff and whatnot. If there's a surge of people that need to go to the respirators and such, and there's disobedience to what's happening. So there are cities here where 30% are testing positive because they're either praying together in closed synagogues or whatnot. So it's an issue. Less of an issue in Tel Aviv. We're pretty much coronavirus free here, but not 100%, but definitely we're not a problem. But it's interesting to see. I think, Chris, what's really interesting about it is you get to see the government at its full color, its true colors. So we have a channel here in the Israeli TV called like Knesset TV, which is literally like Senate TV, where you get to see 24/7 what's going on. Now nobody watches that, but now you get to see like how everything is politics. You know what I mean? Like up until now, it didn't touch your life. What happened in like a different city that's an hour away with their road? You didn't get to see the politics behind the christening of a new road and how long it would take to get an approval and whatnot. This shows you like all
a lot of permitting fees in there, right?
Yeah, it shows you its real colors and how difficult it is to do anything when there's so many outlooks and so many people are thinking different things. And I think that's going on around the world. I have never seen in my life anything that you put something in the middle, COVID-19, and then you get a slew of different approaches to it, different ideas about it, what it is, where it comes from. And it's just so divisive that it's a really interesting time to watch it and to be actively trying to make money as an investor or protect your wealth as a more of an older man or a woman. It's an interesting time.
Yeah, I'll say so. I mean, you and other folks in this circuit have talked for years. I mean, it's, for the average guy who's working as a doctor or, a librarian or whatever, to then come home and figure all this stuff out. And then you throw a COVID on top of that, and then what the central banks are doing, and then the politics. And I think that's one of the things that's unfortunate is that when we'll just use American politics as an example, but I mean, when there's such a track record of deceit and lying, then you have a situation like this. I don't know which time to trust. Hopefully this is the time they're giving us accurate information, but we'll dig into some thoughts on the election, I'd love to hear how you think that might affect the gold market. But to kick it off, is gold headed back over $2,000 in your opinion? And if so, once that happens, do you think we have seen the end of sub $2,000 gold?
Great question. In my opinion, gold is not finished. So there hasn't been. So once gold became free, 1971, you've had a number of bull markets in gold. The first one, 1971 to 1980, where it shot up 24 times or 2,400%. So that was the first one. And then the second one started in the year 2000, and it shot from about 250 an ounce to 1,900 an ounce. And that's a sevenfold return, so 700%. And this current one we're in started on December 15th, 2015, and we're up 90%. So obviously very different than the two previous ones. Do I think it's going to do 24 times and go to 24,000 an ounce? I don't. Do I think it's going to 7,000 an ounce or repeating the 2000 to 2011? I don't. But I don't think we're over yet. I'll give you a few reasons for that. But also keep in mind that silver has practically done nothing until COVID in this bull market. It started the bull market around 13 an ounce. It was 13 an ounce just in March, even lower. And now it's doubled, but it's definitely not how a bull market in silver is. If you look at 1971 to 1980, definitely if you look at 2000 to 2011. So for those reasons alone, you can see that this would be a very light bull market if it already ended. So that's one thing I have to say. The second thing is once gold hits all-time highs, as it did on August 5th, and once silver goes and touches almost 30 an ounce, as it did on August 5th, it's very natural and very normal for them to pull back 10 or 15%. In the case of silver, 24%, top to bottom, from August 6th until it bottom, I think, September 29th. So just a few weeks ago. So those are the first two reasons. The main reason that I think gold is headed higher is because central banks believe that it's worth much more. They've literally told you that on April 1st, 2019, when they changed the requirements for under Basel to Basel III, when it was $1,291 an ounce. They changed it from 50% collateral to 100% collateral. That means that they value it as at least twice what it was that day, which is $1,291. You double that, that's $2,584 an ounce. So at least in their minds, a fair value compared to 2019, compared to the money supply of 2019, compared to the world we lived in 2019, it was $2,584 an ounce. What happened in the Trump years, if you want to get my opinion on it, is gold rallied much more than silver for a reason. If you look at gold compared to other fiat currencies, it's doing amazing. If you look at gold compared to the dollar, it's good. It's doing pretty good, but not amazing. Up until recently, right? It's been trading at all-time highs with other fiat currencies, about 75 other fiat currencies for years. It's in a very good bull market, very healthy. The dollar's been a very strong fiat currencies for the last few years because Trump's style of governing is so disruptive and so aggressive to many people, including Trump supporters, that that's what they like about him, that he's like an alpha dog, etc. It forces a lot of hedge funds, institutions, pension funds, sovereign wealth funds to keep a lot of cash on hand, because you can get a government shutdown, you can get a trade war, you can get tariffs out of nowhere, like you can get a wall with Mexico, you can get a visit to North Korea, you can get two major wipeouts of Iranian top terrorists, Al-Qaeda, ISIS. So you get all of these things in 4 years. And in 2018, the dollar was the best performing asset class in the world. People forget that. The last time that happened was 1969. That doesn't happen a lot, where a fiat currency is outperforming everything else. And it's because people just had to have currency to feel like they have options, and not people, but large institutions. And that, a strong dollar with a lot of uncertainty, is good for gold, because people flock to it as a safe haven. It's not good for silver, because silver is much more correlated with a weak dollar than with uncertainty. Even the retail crowd doesn't go to silver for a safe haven as much as they go to silver as an inflation hedge. They say, okay, the dollar is very weak, it's noticeable in my life, I'll go and buy a few ounces of silver. And I think if Biden gets elected, I think we will get a much weaker dollar. And I think that's very positive for both gold and silver. If Trump gets reelected, in the first few months, he's also going to be very supportive of a strong economy, fiscal stimulus, jobs and whatnot. That's going to be good for silver short term. But in the end, Trump is much more favorable to gold than to silver. And if silver rallies during this a potential second Trump administration, it will come from China. It will come from China's need for silver, China's demand for silver, because their own population is obviously going to be at odds with the U.S. If Trump gets elected, you have to figure that he now doesn't care about 2024 in terms of politics. He will just try to implement everything that his heart really desires in his second term. Think about that a little bit, because now he had to put restraints on himself because of this.
Can't even imagine.
Yeah. So there's stuff to be there. And fundamental to everything, the most obvious correlation that gold has is with real interest rates. If real interest rates are negative, then gold will be very favorable. Right now, they're negative 1%. So a 10-year bond would yield about 0.7%, and the CPI is about 1.6 or 1.7. You deduct one from the other, and you get minus 1%. In my opinion, if you look at the commitment of traders for the 30-year bond, almost all the world is betting on higher rates for a couple of reasons. One, we're in a recovery, so the need to hold cash is diminished, and the need to hold safe havens, as people held in March and April, is diminished. So we're in a recovery. When I say we're in a recovery, obviously your personal situation could be awful as you hear this, but the world in general is recovering from where we were in March and April. So people are getting into equities, back into equities. Institutions are getting back into equities, and that causes bond yields to rise. And obviously, that's one factor in determining real interest rates. Now, if bond yields rise, but inflation rises as well, you're still in negative territory. And that's what I think will continue to happen. Because if you look at 2018, and in December of 2018, when the Fed wanted to raise rates to 2.25, that little click to 2.25, it wasn't governments that puked. It wasn't government that says that waved that white flag and said, we cannot pay interest on 2.25%, or it wasn't Washington that said this is unbelievable. It was corporations and households who refinanced everything at 0 or 0.5 or 1% interest rate, and they cannot live in a world of 2 and above. So I think the Federal Reserve knows this. They absolutely know it, because they reversed immediately. It's called the monetary U-turn. And I think we're going to stay in that world for a very long time until jobs are fine, until many things are fine. It's in the back burner to raise interest rates. What's most important for these central banks is to keep interest rates levels as low as possible so that the federal government can issue as many bonds as it wants to drive fiscal stimulus, to perhaps, if Democrats go into office, bail out individual states, because if sales tax continues to plummet in some states, it's going to be very horrible. It's almost bankruptcy for many states, and they need to issue municipal bonds and whatnot. Interest rates are very important to stay low for many reasons. And it's a balancing act. You can raise interest rate, you can be responsible, but you may get such a kick to equities and real estate that it's going to be a horror show. So I think, in my opinion, rates staying low, driving interest rates, real interest rates to negative territory, a recovery which gets you that inflationary bump a little bit, China's surge of middle class, which gets them involved in silver, and central banks and where they feel gold and silver are worth. These are all driving factors. And I would just say this to finish it: if you're just a retail person, you're awakening to the fact that there's a national debt issue and whatnot, and you save a few $100s and you go and you want to buy silver. You put gasoline in your car, you drive to your bullion dealer, or you call your bullion dealer, and he tells you that silver is 30 an ounce today, okay? And you have $300. So you buy 10 ounces of silver. If he tells you it's $35 and you can only buy 9 ounces, would you change your mind? Would you really tell him, never mind, I'll call you when it's 30? That $5, do you think it matters to the average person? If it's 40 and he can only deliver 7 ounces to you, do you think it really matters to him? To the average person, not that somebody wants to put 100 grand into silver, but to somebody who wants to put $300, and now the bullion dealer has told him you cannot get 10 ounces anymore, you can get 7, and even 6. Even if it tells you it's $50 an ounce, and you can only buy 6 ounces with your $300, do you think it matters to him? In my opinion, he's already so emotionally invested that with silver being 30 or 35 or 40 or 45, to the average person, it doesn't really matter if he really fears inflation. To industrial companies that need silver as low as possible for their products, it's not that big of a deal, because if you look at the thousands of applications for silver, they're used in micro doses in products. So those companies can offset those costs by either raising prices if their brand is powerful. They can do something with their other processes to lower other costs. There is no barrier of entry for me to say that silver cannot go to 50 in this recovery. So I'm not saying it will, but what I'm saying is, in a world where gold is 2,500, it's really not a stretch of the imagination to believe that silver will be 40 or 50. And in that kind of world, mining is a very exciting industry.
Yeah, well, I think pretty much anyone who's watching this right now is on board with that. And for those reasons, I like how you detailed, I mean, and it was just the tip of the iceberg. I mean, to cover all of the reasons why the Fed can never raise interest rates, be a pretty long show. And you pointed out a bunch of ones that I wish somebody would ask about that during one of these debates. I mean, if we're really going to round up all these people, spend all this money on the cameras and the building and whatever other nonsense, I'd love, as a citizen, I'd love an answer. And also, I thought it was interesting because, well, a very interesting idea what you mentioned, how when people get into silver, yes, we like buying lower rather than higher, but I think there's some truth where it's like, when you finally grasp what's really going on in this system, and it was funny because while you were telling that silver part of the story, we've tacked on another $9 million in U.S. federal debt just while you were sharing that part of it. So, I mean, yeah.
And if you look at your screen to the right side of it, I I like that area that they added. Yeah, exactly. Just a few months ago, they added the dollar to silver ratio, basically, and that's very interesting, obviously.
Yeah, it's funny because I noticed that a couple of months ago, and it was at 21.05 an ounce when I first started checking. So again, although Lior, another thing you mentioned in there that you see silver as more of the inflation hedge, and that brings me back to this chart where we have from when the Fed was invented in 1913 until 2008, you had slightly under 900 million, 900
billion.
billion. Yes, sorry. So then 2008 hits. All right, we take that up. So for the first 95 years, we're about 900. All right, then 2008, Bernanke tells us it's temporary. There's October of 2010 when Ben Bernanke wrote his op-ed extolling the first.
Mind you that what you're looking at is the 30th of July 2007 until October 2020. You're not watching it until 1913. But yeah, for the longest time.
It was under there, and then it's just exploded. Yes. So all this last 9 years where gold and silver were getting pummeled, the balance sheet was just getting bigger. Like you pointed out, they talked a lot about tightening, and then look how long that lasted. And I believe they're discussing what is the next stimulus bill right now. So it's kind of hard to see. Can you think of any legitimate scenario in which the response isn't more printing? And based on that, I mean, it fits with what you're saying about silver.
Yeah, it's a big question, and I think my most practical answer in terms of like an investor is you don't need to know the answer in advance. You don't need to start preparing your portfolio for a day where the Federal Reserve would raise rates. It's not something that makes money. You know what I mean? It could be a nice forecast if in 4 years or 5 years we can say, hey, he called it or something. But in practicality, to make money, you need to live with today's circumstances. The reason I say that is, for example, in March, when the circuit breaker week happened, you remember that week? It literally, for me, was like the most amazing week of my life as an investor. And what I did was I published wealthresearchgroup.com/list. It was a list of companies with proposed limit orders, and I said, look, you need to be buying. It was I was listening to all the news, and it was so obvious to me that if $30 trillion were exiting equities and exiting bonds to get into cash. Usually you get people sell off stocks and go into bonds. People didn't even want the bonds. They just wanted the cash in their money markets. We issued that one. There was 14 companies in there. And that portfolio is up over 50%. We then issued wealthresearchgroup.com/list 2. Those have insane gains. List 3, and now literally end of August, before the September, I said there's going to be a big correction in September, in my opinion, because you saw end of August what happened with options. It was just unsustainable, the way that people betted on options. It was pretty obvious that it was overstretched. So we issued wealthresearchgroup.com/tech for the first time. We gave a list of proposed companies that are in the tech sector, and they're all up substantially now, obviously doing this interview at all-time highs as we speak. And my thing is, you don't need to forecast a script, a scenario. You need to live what's happening right now. And if you look at the world right now with 0 interest rates, the first thing governments are telling you is, if you are holding cash, prepare to just lose 2 or 3% a year. You're just doing that. So if you think real estate has a negative 10% or negative 15% potential, then maybe cash is good. If you think that equities, as some commentators on YouTube are saying, minus 80%, or stuff that I hear all the time, be in cash or be in gold or whatever. But if you kind of take out the trauma that Americans have had in 2008 and right now in 2020, and you think that a global pandemic with all the shutdowns and everything that happened, what it did was it took the markets down by 35%. That's a very good way of saying that the worst thing that ever happened with equities market, and by far, we've never seen a bigger move, a bigger 16-day move. That was the fastest bear market in history. You just saw an indication. 35% is, wow. So you have to think in those lines. And I think that because I equate the COVID-19 to like a person that is on the train tracks, and the train was really good. That was the global economy being the train. The train was running, the engine was flowing, the passengers on it, most of them were having a good time, meaning the economy was working for a lot of people, is what I'm saying. Obviously, dissatisfied passengers, there's on any train, there's dissatisfied person that doesn't like a seat, a service, metaphorically speaking. But then there's a roadblock. There's a person, and he has to pull the brakes very hard. And obviously, some people spilled their coffee on them, and some people fell and broke their legs. And this is the COVID-19 March week, right? But remember, except for the brakes that had to be rechanged, and that person that needed to be moved from the tracks, the train is strong. And so the world will continue to get richer and wealthier. The only question is, will Jeff Bezos hit $300 billion in net worth before you hit your goal? So the world is going to get richer as a whole, but what's happening around the world is it's very disproportionate. It's very, I wouldn't say unfair, but it's very, these policies are very favorable to certain companies, industries, and people in the end of the day. And we're walking a very tight line here between how much people are willing to accept this system that doesn't favor them, with how much they still enjoy the comforts that it delivers. Because there's ingenuity and innovation and whatnot on one hand, but when you see the 10 people, in the United States have more wealth than the bottom 150 million people, we might need to look at how to change it. I don't know if riots are going to be the answer, but it's an issue. And for me, the answer has always been to save as much as you can, save as much purchasing power as you can, and convert it into fiat, convert that fiat currency into gold and silver physical, so that if there's a 1-year depression, a 1-year reset, or a 2-year depression, you have enough money to stomach that. And that's what I personally did. I calculated how much my family spends on a given month. I multiplied it by 24, and that's my position in precious metals. If everything goes south for 2 years, I know I have that. And I think if everyone in the world does the same thing, price of gold and price of silver will be worth much more than they are today. And that's basically their fair market value. That's how I judge the fair market value. If more people understood that, and if Buffett understood that with Berkshire.
Seems like he's getting it a little bit. I know he's got his Barrick Gold investments, so he's getting.
He does, but that's $564 million. He has $128 billion in treasuries. If that money, if a quarter of that money was in gold for the past 20 years, Berkshire would be $1 trillion company and not a mere 300 billion or 400 billion. He's lost so much money being ignorant of that. and comparing gold to stocks all the time when he should compare gold with his treasuries. So anyways, that's a long rant, but I'm done.
Well, Lior, I appreciate that. And in case Warren is watching today, can you let him know the services you offer, where he can find
Yeah.
the gold report and the website and all that good stuff, so you can get out
Sure.
there? I'm personally hoping Warren Buffett starts buying some silver stocks, and then
Well,
we
he
see
was a big
that.
buyer of silver in the late
Where do they
90s.
find all
So
that, Lior?
yeah, so Mr. Buffett, you can go to wealthresearchyoup.com if you have a computer. And then I advise you to go to either to sign up for a free newsletter, which you'll get 3 times a week. I know you read Howard Marks, but maybe you'll like my commentary a little bit as well. And then if you're interested in the special reports, that's a nice tab because it's basically a library of free PDF downloads that are silver, dollar, bear market,
Ooh, silver
kinds of
bullion,
strategies.
$50. Yeah.
Yeah, exactly. So yeah, and they're dated, so you can look at when we posted them. So see how relevant they are. Some things are from 2019, for example. Maybe they don't cater to you anymore. But yeah, that's us. That's Wealth Research Group.
Cool. Well, I'm gonna get the silver bullion to $50 report. That one seems like it would fit into my library here. Yeah, and I see you're not a big fan of Buffett, although I mean
I'm a big fan of Buffett. But when I was 16, Chris, a minor, my dad went bankrupt when I was 13. I started saving, working like every day for 3 years, and saved the equivalent of about 20 grand.
You're the tennis expert, right?
No, I was a babysitter, and then coaching basketball in the
Ah, it
neighborhood.
was basketball. That's right. I remember I've heard
Yeah.
that before, and you're teaching.
Yeah, and my banker told me if you get your parents to sign a waiver, you can start investing this money. And he pointed me towards Warren Buffett. So literally, that's the first book I read was a Warren Buffett book. So no, I'm definitely not against it. But what I'm saying is he has a blind spot when it comes to gold.
Yeah, well, I know what you mean there, because it was bizarre to me when I learned about his father, Howard Buffett, who sounded like the Ron Paul of his day. And but in either case, Lior, I appreciate that. Perhaps if I get Ben Bernanke on the show, you can explain gold to him, because he says he doesn't understand it.
Relic.
Know anybody who understands it, which is a little bit odd to me, but anyway, I thank you for joining me. Interested to hear how things are going there. You stay safe, and we'll check in again soon.
Thank you, sir.